Let's listen to our inspiring panelists unlock the compelling dynamics of investment post-2022 and learn about the fast-evolving business trends and what it takes to build resilient businesses that are able to quickly adapt to disruptions while maintaining continuous growth and profit. Let's all welcome our panelists, Aqil Al-Rashhi, CEO of WealthWell, Dr. Mazen Al-Zaidi, General Partner at STV, Amal Dukhan, General Partner at 500 Global, Abdel Aziz Al-Lughani, he's an Endeavor entrepreneur and the Chairman and CEO of Floward, and our panel moderator, Faris Ghandour, Partner at WAMDA.
Good morning, everyone. My name is Faris Ghandour. I'm sitting here in my capacity as an investor, unfortunately. I'd love to be sitting here in my capacity as an entrepreneur since I've started a business in the mental health space last year. And we're doing what we call multimodal care, but I'm not going to pitch that right now. So I'm very privileged to be here. And Jordan was one of the first countries to the Jordan Endeavor chapter was one of the first countries to really graduate many outstanding entrepreneurs. So seeing this come around full circle is fascinating. And, not to take too much of my time on that, at WAMDA, what we do is invest in multi-stage companies. Today, we're an evergreen structured fund. In other words, we are a solo GP. In other words, super angel. In other words, a family VC. Effectively, it is our own money. We do have 2 funds under management where we manage outside LP money, but most of the capital we've deployed over the past 3 years has been our own money, and that has given us the privilege of being able to be, selective where we want to be and aggressive where else we want to be as well. But we have a very esteemed panel today, and I'd like to first go around and have them introduce themselves, and then we dive right into questions, if that's okay. So, Mazen, do you want to start?
Yeah, sure. First thing, I'd like to thank Endeavor for hosting us. Amazing crowd, as usual. So my name is Mazen Al-Zaidi. I'm a general partner at STV.
Pleased to be here as well among this panel and in this room, definitely. Amal Dukhan, I'm a general partner at 500 Global. We're basically, we started as an early stage VC. Now we invest in multi-stage companies all the way into creating SPVs pre-IPOs. Our AUMs is about $2.7 billion, and we are highly present in the Middle East and North Africa these days. We invest through accelerator programs, but also through direct deals. So truly pleased to be here among this panel. Abdelaziz is one of our portfolio managers, actually, companies. So
indeed,
to you.
Indeed. Good morning. I don't think we're gathered here by chance. This actually marks the, I believe, 7th year anniversary since I first visited Endeavor Jordan. And at that time, it was during the exit of Talabat, my previous company. But I remember noting to the audience in 2009, August or September 2009, we were operating in Kuwait only. So it is at that time when the Yahoo Maktub exit happened, is when the light bulb kind of moment happened to me as well. So this is when I did reach out to a few friends in Maktub, in Yahoo, who learned more about what's happening. Well, that kind of was the spark of widening my thinking horizon. So since then, I've been operating or investing in consumer internet. 4 years back, 5 years back, I embarked on a journey in the flowers vertical. For today, alhamdulillah, Flowers is, we try to be the preferred flowers and gifts destination online. We operate in 9 countries across the MENA region and UK. So I hope this will be beneficial to me as well as to you.
Good morning, everyone. My name is Aqil Al-Rashhi. I'm the CEO of WealthWell, which is a family office based in Riyadh, Saudi. We're focused on private equity and venture capital, as well as we do also real estate investments. It's a pleasure to be here.
Thank you so much. So I'll start with, if you don't mind, Abdulaziz. So the reason I want to start with you is because I think you are the godfather of the Khaliji ecosystem in almost every sense of the word, as an investor, as a founder. And I think what particularly strikes me, and to the points raised earlier by Dina and Ahmed as well, about sort of, the market is shifting, cash flows, free cash flows is the key metric now. You've successfully built probably one of the most profitable food delivery businesses in the world, Talabat, and continues to really hold, the consolidated group's income in general, as well as another one now, Flowers. So I'm assuming you're profitable. I don't know, but I'm assuming you are. But you're also an investor. But I want you to talk about your capacity as an entrepreneur. So how did you, there's this misconception that building a high-growth consumer business necessarily requires high burn, but you've disproved that twice. So can you talk a little bit more about maybe how, focusing on profitability doesn't necessarily always have to come at the expense of growth?
Absolutely. I'll just do a small demonstration. الحين صراحة it came to my mind.
Is that your checkbook?
I have 5 Jordanian dinars in my hand. So maybe let me just see a show of hands. How many people would buy it for 2 GDs? Okay. Those who aren't buying, maybe we can have a chat later. But I think this is what's really happening in our part of the world, right? We need to be mindful in that buying growth forever is not sustainable. So I think during the COVID crisis, what happened elsewhere around the world.
بس عم يطلبوا مني نعلي صوتنا.
Okay. قرب المايك أحسن.
بس عم يعطي فيدباك.
Is it better? Okay. أفضل? All right. So I think the 5JD example is what's happening in our part of the world. And people think that demonstrating top-line growth or user growth at any cost is actually sustainable forever. So at the heart of it, unit economics really, really do matter. I think that what's happened in COVID has really put out there the elephant in the room of how much people are really burning money and how much attention is being given to unit economics. We've seen Europe, US, Asia, companies with better unit economics losing less money on their valuations. They were still pressed hard by market multiples, and they were a lot less impacted by what's happening in the rest of the world. Oh, I think that companies in our part of the world, in the MENA region, are not alien to that. We need to be mindful of what are the fundamentals. To your note earlier, this is the first question we asked ourselves at Flower before even starting the business. We liked the space. Back then, Bil Khalij, we liked gifting, but in particular, flowers was a $1.5 billion market. Relatively nascent online presence, no market leader online or offline. So it checks a lot of boxes, right? But should we do a marketplace or maybe operate in a pure play e-commerce model? We opted for pure play e-commerce for 2 key reasons. One of which is unit economics. You don't frequently buy flowers or gifts as much as you buy food, right? Or go to the grocery, or maybe fashion, or consumer-related products. A lot of the consumption is related to occasions. But if you look at the take rate from that business model, apply it to your customer acquisition, and whatever lifetime value can you really capture, the economics don't really add up. Well, this is why instead of making people buy more or celebrate more occasions, we wanted to make sure in a more conservative scenario, how can our economics be unparalleled globally? But this is why we integrated our supply chain almost to the fullest, right? So in Jordan, we procure flowers from some of the best farmers and growers. We make sure we receive them fresh. We have 3 to 4 shipments a week. We do the arrangements ourselves, push them on our application, and manage the last mile delivery ourselves. This is, it might take some investment at the beginning, but if you model your economics, it should turn out to be quite disruptive in a very short time. Hence why our average kind of break-even period from every city we launch is 6 to 12 months. We believe that in 6 to 12 months, we are able to turn profitable. And this is why we have built, up until last year, a business that, I think by the time when Talabat sold, we had $7 million total revenue for the year 2014. Tamam?
14.
Okay, 2014, yeah. We, alhamdulillah, today generate more than that revenue on monthly basis.
MashaAllah.
Alhamdulillah. We've only raised $32 million in 5 years. And I think it's not rocket science. You just need to be mindful or aware of how the economics really look like. We start projecting them really in the best way, right?
I think an important, there's two follow-ups. One is brand. So you both are household brand names today, and there's others, other businesses not in the same domain who don't necessarily focus on that as much, but might have more market share within their industry. Second is, the market size. I think that's, we've looked at a few businesses for Saudi al-Yawm, and very unsuspecting, but extremely and supremely profitable in various domains. And I think market size speaks a lot. So how do you, for Jordanian and entrepreneurs who are in tertiary markets, and you built Talabat out of Kuwait, which is relatively small market compared to the rest of the Khalij, how would you approach building in a small market relative to a big one? Or would you, if you were to start today, would you go straight into a large market like Saudi for the sake of profitability?
I think Saudi, I think we're all privileged to witness what's happening in Saudi right now. But let's take a step back. 5 years ago is very different from where it is today.
Yeah.
Saudi is more than 50% of the GCC's GDP. Saudi is more than 30% of the Arab world's GDP. Now, digital infrastructure 5 years back, Saudi did not have the same representation on its online presence. A lot of investment has been done by government, by telecoms, by banks, by logistic companies to make sure basic e-commerce infrastructure is there. For today, alhamdulillah, you have very high internet penetration rate. You have very high banking population. Logistics are very much sorted, and you have access, very wide access to the kingdom. You have the means or tools when it comes to funding or regulation that protects both entrepreneurs and investors. But I think if I were to compare, 5 years back, I would have probably said Saudi is not the best market for e-commerce to flourish compared to where it is today. And just to put some context, Saudi's e-commerce penetration 5 years back was less than 0.2% of its GDP.
Of GDP or total retail?
Of GDP.
Okay.
Today, it's more than 1.5% of GDP. This is how much Saudi has grown, has invested in its country. And today, if you're not in Saudi, I believe you are not relevant.
Does Saudi's profitability subsidize smaller markets' profitability, or are you profitable in each one of your smaller markets as well?
I think the Gulf overall, in terms of economics, are quite similar. Saudi maybe tends to have, in some cities, select cities, enjoys the same economics. In other cities, it might be a bit lower. But in terms of size is very well represented online today. So if you nail a market and you really have a product market fit, I firmly believe that, يعني, I'll put it in context. So we operate in 9 countries, we service 37 cities. Saudi on its own is 50% of our business. This is how big of an opportunity Saudi is.
Excellent. Dr. Mazen, so you've recently joined, and I say recently, it was the beginning of the year, STV. It's one of the largest and oldest large kind of growth stage investors for Saudi, STV. And I ask, what sort of dry powder do you hold today? I mean, you don't have to give the details, obviously, on percentages, but what sort of signals do you look for before you start deploying again more aggressively? You've continued to deploy, of course, but now that there's kind of been a normalization in valuations, what are some of the key signals you look at to say, yes, we're ready to start, throwing more firepower? And you recently increased your LP, if your LP check, STZ increased their LP check by $300 million in you, so I'm assuming your AUM is closer to $1 billion now. Can you speak more to, the dry powder and when that starts to get deployed aggressively?
Yeah, sure. Cool. Yeah, I guess so. Let me try to answer it in a
Sure.
very different way. I guess good companies will still be able, even today with the market conditions that are happening, will be able to raise money and capital. We've seen it in the last couple of months. We're still approaching new investments and in a very cautious way. But maybe how we look at it today is that this is based on a report that we issued a couple of months ago, is that we believe in the next 7 years the region will be able to output 45 unicorns. Today we have around 5-6 unicorns in the region. Saying that, of course, these unicorns or companies that will be popping up hopefully very soon would require additional investment to be able to reach that mark of the 1 billion. And we believe that in the next 24 to 36 months, there will be a number of kind of pre-IPO, let's say, rounds where we believe that the Tadawul Stock Exchange in Saudi will be one of the avenues for not only Saudi companies but regional companies within the region to be exiting. We see a huge opportunity in the next 7 years of a value of around, as our report stated, $100 billion of value through listing. Based on that, we still believe that good companies will be able still to raise. The 300 million that was announced during the FII is the purpose of taking these companies near to the finish line and hopefully exiting. Today, within our portfolio, we have around 6 to 7 companies that we can see in the next 24 months reaching that status. And we believe that hopefully very soon we'll see more unicorns within Saudi and the region. Of course, Saudi, we're hoping that it will have the kind of the lion's share in some sense. But I'd like to go back to the previous question when you were asking Abdulaziz about even the small markets and entrepreneurs with limited markets here in the region. And this is something I've been discussing with a couple of VCs in Jordan and others, that I think Saudi has been looked at as the market to scale, and that is a fact, and it's true. I'm one of the believers that although it's a fragmented market within the region, but we should look at it, especially founders and VCs as a whole, starting in Jordan or in Kuwait or in Bahrain or even in Egypt, having in the back of the head that you are or you should be able to scale into other adjacent markets. I think it's very important. I think today, as an entrepreneur, even investor, investing in a company that thinks about having or being to operate in a very limited or small market is going to become a challenge in the future for investors to get the returns, for entrepreneurs to be able to guarantee exits. Therefore, I believe that it's not only Saudi, it's Saudi, Jordan, Egypt, Kuwait, Bahrain, and others as well. Hopefully we'll see more companies being able to operate in different countries within the region. And of course, this would help these companies, as I mentioned, to be able to grow and reach that point of hopefully generating hundreds of millions of revenues and being able to exit very soon, inshallah.
Excellent. Yeah, I mean, to your point on pre-IPO, we've seen 4 in the past month from Saudi pre-IPO rounds, so hopefully, some of them very profitable, mashallah. So I want to segue from that point to another point. So an observation we have, we invest in, we're LPs in many funds outside of the region. We're starting to do that now in the region as well, just specifically for Saudi or Masr, just because we have, those are mature markets in and of themselves. You could afford to run a regional fund out of one country before, now it's very hard. One big observation I've noticed since I've started investing in 2013 is AUM has increased in MENA, that's great. AUM has increased in Southeast Asia, that's great. What's the difference between those two markets? The AUM in Southeast Asia increased largely with the same GPs, so more or less the same fund managers. What that means is you have less pressure, less deployment pressure, and more sanity on valuations. Whereas in MENA, you have at least 40 new GPs in the past 3 years that came out, some of them family offices and whatnot that kind of manage their own funds. And what that does is, yes, in an absolute sense, it's good for the ecosystem. But what it means as well is it puts a lot of pressure on early stage checks. So growth stage, less so, because most of the new GPs aren't growth stage. There's only you and Sanabil, and now obviously 500 are doing a growth stage, and maybe some others that I miss. But the early stage comes under a lot of pressure. And I think it's problematic, and I'll tell you why. And I want to segue into you, Amal. I'll tell you why I think it's problematic. It's problematic because funds are building unicorn exit theses. So if you don't have the capacity to become a unicorn, then we won't look at you. What does that mean? That means they're being tolerant on early stage valuations. Because if you're exiting at a unicorn plus, it means you're lenient to what valuation you get in at. Whereas most of our exits at WAMDA have actually come in the $100, $200 million range. Now there's, there's lots of room for unicorns and IPOs and liquidity, but it's a whole different story. But my question is, how do you fundamentally differentiate as an early stage investor, Amal, in that context? And how do you resist the temptation to go in, I'm seeing some rounds that are 30 million at seed, raising 5 million, 30 million, and some big blue chip investors are going in under the guise of TAM. This is a large TAM. So, okay, it is a large TAM. And, we don't have a track record of generating much liquidity at the unicorn level. There's probably only 1 or 2 exits that happen at that level in the region, and more will come. But I want to segue to you. How do you have great early stage access, Amal. How do you view the question of valuation when you go in? Because I'm sure you have a large delta between different companies at the seed stage.
I think it remains definitely as a challenge nowadays, and everybody have experienced that in the past couple of years, where the talk of valuation was basically in every round table and every panel about, what's happening in the market. But I think 500 had an advantage, or an early advantage, to get into a lot of the companies that are actually at growth stage today. They're reaching their Series A and Series B at a very early stage, right? Before the phenomena that we're seeing today, before and pre-COVID as well, right? Now, continuing to scale that and continuing to follow that strategy definitely has its own challenges, especially that we are in a market like Saudi Arabia today, where there's high liquidity in the market. And as you mentioned, there's a lot of GPs that want to deploy, right? And they want to basically be part of the best deals. And you see that this is what actually could throw the valuations really off the top. There is a high demand on, few companies in the market. But I think our strategy is more about going, more spread out, because we do look at different markets, not just Saudi Arabia, but we also look at, the other countries that are surrounding. So I would say that the answer to this is kind of like a balance. So we do come in super early. We still find favorable valuations at the very beginning. We normally, by nature, we don't lead, but if we come first in the cap table, we're naturally kind of setting, the valuation in one way or another, because we're saying we agree. And I think that's what we need to be really super careful about, because every VC is sending a message. By getting into that deal with that valuation means you agreed on the numbers. So what message are you sending? And I think that's the mindset that we look at the startups. Do I want to be part of this or not? Can I help really take that company from that level to the next level, right? Am I a value add or not? And I think that's also another piece, how can we really push the boundaries really in getting the company to that when it comes to high valuation? I wouldn't say that we haven't done it. We've done a few. But the justification is I go to the unit economics of that. Do they have an understanding, beside the founders, do they have an understanding of what it takes? I don't believe in injections, high injections of cash to inflate the tractions at the beginning. That's going to last for a period of time and it's going to drop. That valuation will be devaluated. You're going to end up raising, on a lower round. So again, I think it's about a conscious and where you're going to be, but maybe we're privileged because we have a wider range. We get to invest in two ways. We invest in accelerators, so the startup comes in the mindset, understanding that they are early, we're going to try to really work it out with you. But we also invest in direct deals, meaning I co-follow basically and co-invest with other, investors. So I think it's about, our role as GPs. What message are we sending? When I look at the cap table, I know who agreed to what and who didn't agree to what. So I think there is a room of correction maybe that I would expect to see, in the market, but you'll still always, like any other mature market, you'll still see, a lot of these companies. But let's see how the collective conscious plays, I think, in the coming period.
So, Agil, a question for you. So, can you maybe, as a first step, maybe tell us a bit more? Do you do direct checks or do you do LP checks as well in funds?
We do both.
You do both. Okay, so let's ask about LP checks for a second. So back to my point earlier, there's so many GPs. How do you go about selecting a GP when there's a lot of noise in a market that is fundamentally, that most VCs haven't gone through a full cycle, right? So you're very much an early stage investor in the sense that you're betting on GPs. And let's be honest, track record of GPs in the region, a lot of them have broken up, the older ones have broken up. So it's not like we have very clear understanding of, this GP stands out or this GP stands out through the full cycle. So how do you look at an LP check? And do you do LP checks in the region? Do you do LP checks abroad? How do you approach looking at VCs or
Absolutely.
GPs, fund managers?
I think there's a lot to unpack here. But let me start by saying this region has been notorious, maybe for lack of a better word, to be relatively expensive to the rest of the world, GCC in particular. That is shown basically even on the public markets valuations. If you look at Tadawul, Tasi, and the rest of the GCC, they're actually trading at about 20-30% premium to the emerging markets valuations. That actually has even shown on the private markets as well. So every time that you basically talk to an entrepreneur about a startup, the 4, the 5, the 6, the 7x multiples are normal to them. When you talk to Southeast Asia, basically entrepreneurs, you see more reasonable valuations. I know there are things that you can change, and there are things you just have to accept and go on about it. And you hope basically that multiple, that high multiple you're entering at early on, that it's going to translate when you basically go public. That's at least the thinking.
Answering your question more directly, we do invest directly and indirectly. We do invest with local, regional, and international GPs. In the international side, which is the short side of this, is basically you rely on the track record, as you do with every other investment. And of course, when you are talking to the Sequoias and the Andreessens and the Tigers and the General Atlantics of the world, there are basically tens, if not more, of funds that are not only harvesting, that actually have solid DPIs and basically they are fully exited. In the region, on the other hand, it becomes slightly more difficult. If I may say, probably there are 50 VCs in the region. A lot of them have emerged in the last couple of years. I would say less than 10% probably out of them, they actually have a second fund. And even less of that have actually shown some DPI on their funds. And that puts family offices, potential LPs, in a really tough situation, how to actually compare. And what we do actually, whenever we go through our potential GPs in the region, we do what we call a 360, which basically we talk to LPs who have invested with this GP. We talk to entrepreneurs who these GPs have invested in, as well as we talk to other GPs who actually have co-invested with this GP. And what we realize is there is a sense of relationship element that is key to this region. And I always say it pays off to be nice. There are some VCs, for example, that have developed a reputation of being bullies or basically not really entrepreneur friendly, et cetera, et cetera. And those GPs, I believe, will be irrelevant as time goes on, especially with more and more GPs entering this space. And basically going through this 360 helps us basically choose what we believe are going to be the best GPs and the winning horses. Now, the fact that there is relatively a small number of GPs, that's actually an advantage because it's relatively easy
in the region? Small number of GPs here.
Exactly, I mean, compared to global.
Yeah, but on a market basis, I think we have outsized number of GPs. So you have per capita many more GPs than arguably someone should, right?
True.
Or a market should.
But I compare it as, for example, like, 1,000 VCs basically in the US versus 50 in the MENA region.
Yes.
And you can see, basically you can talk to basically the top, I would say, 20 or 30. And it becomes a reasonable number that you can work with as a potential LP.
Yes, absolutely. So I think I don't want to emphasize too much the investment side because I think we do have a fair amount of entrepreneurs, though I could go into a few other things. I want on that front. I want to ask you, Abdulaziz, what's here? What's here to stay? You founded Talabat for 2005 or 6? Yeah. So you've been through many market cycles. What's here to stay, and what's going to change? I mean, what we're seeing is unprecedented. I haven't seen it before. This is not business as usual, and things will not. Some things will never come back. What's not going to come back in tech, and what's here to stay? And I'm not asking about good founders, frugal founders. I'm talking about like actual ecosystem fundamentally. What are you really noticing that's just not going to come back?
Okay, so I think that COVID is something that doesn't happen often, right? And we've seen e-commerce penetration rates probably achieve, the growth we've seen is representing the past 10 to 15 years, which is quite a lot. It's still a very low percentage of our overall economy, right? We live in a $3.5 trillion economy in the Arab world, and e-commerce penetration is south of 35 to my latest.
I want to push back on that point a little bit. So let me tell you mine. So one of our portfolio companies, an e-commerce company, they do eyewear. It's called Eyewear. So their online growth was good, but their in-person growth is what took them to the next level. The way I think about Saudi to some extent was it's an online first market and then went offline, and then everyone's realizing people want experiences. So yes, I mean, I agree with you, but maybe you can follow up with a comment on where you see the offline coming in. Sorry to interrupt your point.
بسيطة. So I think that يعني, if the past 10 years was infrastructure investment and getting people online, I think the next 10 years is definitely people getting to pay more online. Now, if you break down that 35 billion e-commerce market, whatever is being invested online, lion's share is hotel and travel. And then comes F&B. And then it's fashion or consumer or cosmetics.
Yeah.
And then you have maybe flowers or gifts. But the rest is literally a desert.
The long tail. And this is where
It's-
Zid can come in. This is where, you know,
It's
Sella comes
huge.
in. This is
It's huge. It's huge. So I think what is here for us to definitely stay is we will definitely see more verticals being digitally transformed over the next 5 years, a lot more than what we've seen over the past 5 years. We will definitely see more consolidation happen in the market.
on the e-commerce front. قصدك ولا بشكل
Yes,
عام؟
and specifically e-commerce, I think we will definitely see more consolidation happen. Many mom and pop local shops have done, mashallah, very well locally, not yet have scaled. Buying and integrating in your ecosystem perhaps makes more sense than actually organically building. I think that the role of sovereigns is definitely here to stay for the next 5 years. We've seen sovereigns turn from, traditional manager selection or allocation to where now they're acting more like a GP themselves, right? So we've seen them have their own subsidiaries who are very active or maybe competing against you guys in some cases. Adil?
Competing against Tuhun or Wanda?
Both. I think these are the general kind of remarks. I firmly believe more verticals to be digitally transformed, more M&A. The role of sovereign is going to be a lot more strategic, and many of us are already previewed to what that looks like. But I think what's really critical is how much responsibility do VCs have? We have unprecedented money allocated or earmarked to venture capital in the region. Never heard of in the past 10 to 20 years, right? But there's a lot of money earmarked to be deployed over the next few years. Money has already been deployed. Well, I think there is a huge responsibility صراحة on VCs themselves. يعني I'm fortunate in disclaimer بس in STV and 500 are يعني we're really proud of them backing us. بس
And you're a VC yourself as well.
I don't claim
You don't
صراحة I'm a
advertise
VC بس I do invest صح كلامك. But what's important is there is a responsibility towards entrepreneurs, not in terms of valuations, or it's really the value generation team that you would expect. It's making entrepreneurs dream bigger because they are able, through smart capital, they're able to attract the best talent in the world, they're able to make them dream bigger, and you're able to scale like never seen before. You are competing directly with hiring the same guy like Aramco are.
PIF.
This has never happened.
PIF.
Or PIF, or whatever. يعني, you have the access to capital to really dream or think big. Well, I think the role of investors is to help us really dream bigger and have a much more realistic vision.
طيب سؤال it's a shift بس it crossed me as you were speaking. What's the role of omni-channel with Flowered? How do you look at doing in person?
So we have a lot of offline activations. More than 50, let's zoom out. So more than 50% of the market is actually B2B and not consumer. That we already have an offline presence. And we work a lot with private sector, governments, and helping them with their events or what have you, right? So that's one part we're already working on. The other part, which is more consumer retail, offline, we believe there are different ways to how markets will move. I'm an investor in Iowa as well, but I don't think that we can compare all verticals in the same way on what the outlook looks like. Eyewear has a very sensitive, personal. يعني maybe let's see a show of hands over here. How many people are willing to buy their, medical eyeglasses online? Okay. So how many people are willing to buy their flowers online?
But
I
eyewear
think
is sunglasses as well.
everything يعني هو eyewear overall
Yes.
صح lenses or glasses or sunglasses. But I don't think that all verticals can be equal. I think there are certain dynamics for each one, and there are quite different. We're firm believers in the gifting experience we have created, whether it's around flowers or the other categories, is actually unparalleled globally. The convenience we've managed to achieve, and then you're able to order a gift, the recipient receives it in an hour across 37 cities with thousands of SKUs is probably unheard of.
While maintaining quality across markets. I've used flour virtually in almost every country, and I get the same kind of experience.
If it weren't for great صراحة partners like 500 to STV, we weren't able to scale that fast and invest significantly in our infrastructure, in our team. Today we're 1,100 people. It's no joke, right? And we have very big plans to take our experience from this part of the world to other parts of the world as well. So I think to your question, what's here to stay, I firmly believe in getting more people to pay online, and we will see more verticals being unleashed. We will have much more consolidation. We have great partners that help us dream bigger to actually achieve that consolidation. I think it's the role or responsibility. We have sovereigns investing heavily in the region, and they are definitely moving the needle.
And I mean, Saudi woke up, right? So, as a market, getting a MISA license for Tuhun took me, 3 weeks. So it was very easy to do. I think that's the real, everything else is to...
To Mazen's point earlier on the rest of the region, yes, Saudi is 50%, but there's another 50%, right?
Yeah.
And if you don't grab it today, someone else is going to do that. So hence why I think having that bird's eye view, or making sure you have a close eye on how the markets look like, which markets can you really enter, grab, keeping your hands on the pulse of what your cash burn is, or not really investing so much in just buying growth forever. أعتقد we will see more global franchises being built from the region than ever before.
Excellent. Doctor, as a late growth stage investor, pre-IPO oftentimes, the biggest shift is in governance for a lot of these companies. And some of the companies we're looking at who've been profitable for a long time don't even have solid CFOs. And we've seen a few write-offs that occurred for largely for governance oversight, some globally, obviously like FTX, and some regionally, without naming any names. Can you tell me about, has your, what do you guys do in terms of governance, and how do you ensure that at the growth stage, because a lot of that rests on you. For early stage investors, they can spread their bets and they'll write off. It's a write-off at your stage is a bit more painful. So how do you go about instilling governance in companies that weren't used to it?
Yeah, sure. It's an unfortunate truth that write-offs happen in venture capital. and I guess it will continue to happen. I think the main thing is to reflect on what went wrong and how this could be corrected in general. Saying that, I do like to highlight that some of the markets that we've seen some write-offs of some of the companies, I personally don't believe that it will have an impact on investment appetite. Still great markets, still great entrepreneurs. Just wanted to highlight that. Going back to what you mentioned about governance, so as a growth stage fund, one of the main things is that when we invest with a company, we want to take them to the finish line. So the early stage funds do their best in kind of backing up the best entrepreneurs, then us identifying the high scale entrepreneurs or founders, investing in them, and following on through investment and co-investment with other funds. We believe, yes, there is a challenge when it comes to governance in these companies. Talking about STV, we have been engaged with several of our companies. We've been very active, especially in the last, let's say, 6 to 8 months, trying to help these companies to prepare for IPO. We have a couple of partners that we're working with, both on the government side and the private side, because I think the last part is just the listing, but there's a lot of preparation, especially when it comes to governance before that. So we continue in either trying to, I wouldn't say educate them, but in trying to make them aware of some of, let's say, the gaps that could exist. Another thing that we started to do is setting up IPO committees with some of our portfolio companies. So starting early and trying to build that governance, defining that roadmap, and we believe it's going to take a while. So startups are usually agile and they want to go fast, but at some point of time, for them to prepare and to be ready from a governance kind of perspective, that will take some time, and we're working on that actually with them. Hopefully we'll have some good announcements very soon on for our portfolio companies on how we're going to support them regarding that, inshallah.
Fantastic. Amal, so you're building a growth stage extension to your what is a notorious kind of early stage spread cast a wide net. How do you balance between the two? How is it different? Is it just a question of raising more money and saying this is going to go towards growth stage? Is it a fund that is a sort of an opportunity fund that invests in the winners, or is it a standalone growth stage fund the way, let's say, Sanabit or STV are?
So Firas, if you allow me first just to comment, it's burning like hearing all of that, when it talks about write-offs, right, in the market. So just quickly, I think write-offs in the last period and in the coming period, we probably will start seeing more for many reasons, that we can, talk about offline, obviously. But I think it naturally creates a filter of real entrepreneurs that are in it for the long game. So when they see that all of these entrepreneurs have gotten into the market, and this happened because of whatever reason, cash flow problems, not enough, demand, regulatory schemes, all of these, there's so much, that they can be impacted in. But there's entrepreneurs that are able to create that sustainable path. There are entrepreneurs that are able to really weave and be resilient, in order to take it to the next level, whether through diversifications, coming up with innovative business model, innovative, ways of figuring their unit economics and all of that. Another opportunity that's interesting in that is basically this phenomena have attracted the eyes of, there happened very, very premature exits recently that we started to see, and it was like, why this exit happened now? There could have been a room for growth. So all of those happening, at the same time, it comes because of scare, not trusting that there is enough room to grow, or maybe there isn't enough capitals in these markets. That started to attract, corporates and family offices and basically private equity to start looking at, what are these companies doing today? Can we lift that up? what can we do if we come at an early stage? What sort of contribution can we offer in terms of our network, in terms of the possibilities? We started to see this with our companies and heavily in the past 6 months, which could open and unlock a different breed, of the companies and the exits, and not necessarily the billion-dollar, exits that you were talking about, but a different breed of it, which could be healthy for the market. So, and going back to that, in terms of the growth and really shifting and pivoting to the growth, in the current Sanabil 500, the original thesis was to stick to early stage. But naturally that we're seeing that there are very good companies that are in pre-Series A and Series A, and we want to be part of that. So we started participating in this with the condition that we could be value add, and we're still able to advise and take them to and unlock the global network as long as that we're able to do this and see the possibilities in different markets. And that's part of the assessment that we do in the DD. But why the growth fund today? It will be opportunity fund. Obviously, there is part of it, but it will still double down, on the previous ones. So that's part of it. There's a lot of the previous portfolio companies, hence what we're seeing over here, that will be growing in the coming period, that will be requiring a lot. So that's another very important component that we stick around, for it in the long game. So there's definitely different reasons of why, but I think finally we started to see in the market, certain companies that are really at a growth stage. We're celebrating their successes. We're seeing a lot, of those that are coming and hopefully growing, and every VC is trying to be part of not just the capital part, really what would be the next level, and that's where you see the international VCs looking, at this market. I don't think I have seen much more precedented times where I receive calls from, VCs in Europe or in Germany, or in the US asking, 500, why are you in this region? How did you do it? And how do you continue to really, be there? And I think there is power in being in the local market. There is power in being around the entrepreneurs and being close and understanding really the nuances, of what's happening around. So indeed, I think it's a natural evolution to go, into growth since we were here since 2017.
Absolutely. I mean, to your point on the power of being local markets, so if you look at, again, to use this example of FTX Binance versus local companies like Bit Oasis, where I sit on the board, right? The regulator wants someone to talk to, and the regulator wants to be able to have someone that works with them. These bigger companies can't, won't be able to do that. So I do think that being nimble and small is a feature, not a bug. Being in a market that's unique like ours is a feature like a bug, and that's why I said earlier the need to build the thesis for a sub-billion-dollar exit is so necessary, not because you're going to get a hit on your multiple on invested capital, but precisely because we're a smaller market. The US can afford to have GPs saying unicorn, because guess what? It's the largest economy in the world. We are not. We're just starting. So, and it's not that we don't want to invest in could be unicorns. It's that when you say we only invest in companies that can be unicorn, it means I'm willing to come in at 30 instead of 20. When your exit thesis or returns analysis assumes a 100 million exit, then you cannot do that, So, Aqil, that segues into my next point is, how do you, you're looking at the top GPs, obviously, globally, the Sequoias, the Andreessens, and they have access to superb deal flow that's just has access to a 300 million market overnight. But how do you look at that angle here in the region, specifically on GPs that are, building more, for lack of a better, more sane exit scenarios that are sub-billion dollars? Does that come up? Do you stress that with some of the GPs you look at when you invest in them? Do you feel pressure are you exerting pressure on earlier stage deals for that, or do you still have conviction, or do you have conviction that yes, we can build a thesis for billion-dollar plus exits here?
First of all, everything is just in scale and in proportion. There's this obsession with the word unicorn, which is a very random number, $1 billion. But basically, there's
I deliberately didn't use that word, by the way. It's $1 billion plus, because they're no longer unicorns.
So,
but anyway, go ahead.
So let's call it $1 billion valuation.
Plus, yeah.
And there's this obsession about this number, which basically has made its way through the venture capital world. And I echo my fellow panelists that actually, you can make great exits at $100 million or $200 million. That's just what our market size is, and we just have to accept it. This is not the US, this is not China. That doesn't mean that you cannot really make great investments. I think to Abdurrahim's point about the unit economics, going into a transaction or going into a deal from an early stage and making sure that basically this is a company that has what it takes to actually be profitable in the foreseeable future without really much, buying your growth or basically putting, inflating numbers or whatnot. It absolutely can happen. And yes, absolutely, that's the way that we look at it whenever we invest with our GPs in the region, is that we take into account that, we're not really expecting outsized exits in their portfolio companies, but rather reasonable exit. And at the end of the day, as an asset allocator, you care about, basically the multiple on your invested capital. Whether the exit was $1 billion plus or not, that basically is background mathematics. What matters to you is basically you're able to generate the multiples that you're aspiring to
and
achieve.
realized at that, DPI is extremely, that's the delta between DPI and TVPI is...
Exactly. And I think that's going to take some time until we are able to see some DPIs in the region. And of course, we should not apply too much pressure. It's a nascent sector. It's a nascent area. There was some, maybe counted activity basically back 10, 15 years ago. But I would argue that the real venture capital asset class did not start with full force except 5 years ago, when basically we started seeing government effort, when we started to see orchestrated effort, when we started family offices such as ourselves.
And when the big market opened, frankly.
Big time. And I think in order for us to see this taking it all the way to the finish line, I think basically the regulator as well as the private equity asset class, they have their own role to play. One of the challenges of this region, for example, is the lack of basically M&A activity. And the main challenge there, I believe, one of the speakers early on highlighted basically the M&A activity in Europe and basically contrasted it with what's happening in the region. And I think there is a lot that needs to be done, particularly with regard to what we call the LBO model. You can do LBO transactions, for example,
because there's no L.
Because there is no L in the region.
The L doesn't exist.
There is buyout.
Yeah.
But the lenders do not really have the appetite to actually offer LBOs. And hence, you will always see that side of the value chain is going to continue to be broken.
Yeah.
Unless something happens to tackle that. Other than that, you're just going to have to go with direct listings or IPOs.
Yeah. So we want to open up to the audience, but quickly, literally 30 seconds each, because we have some of the most promising founders in the region. Maybe one takeaway from each of you, starting with you, Agil, for founders. What would you recommend founders do from your perspective, either as an investor or as an LP? What are you looking for the next, say, 12 months for a founder? What's your advice to a founder?
I would say simply that I know this is a tough region. As I mentioned, this is a tough, basically, time. And it's a nascent sector in an emerging region. There is a lot of challenges that are facing entrepreneurs. Probably this is the first, basically, significant correction that this region sees. This is not the US, where basically we have seen the 2001 and the 2008. A lot of people, this is the first time they see this. And not only that, a lot of them, they are surprised by the shock of what happened in 2021 and what is happening in 2022. When basically the entrepreneurs were being chased by family offices and VCs, now basically it's a different story and it's a different challenge, and people are being very, very thoughtful before writing a check. If you believe in your thesis, if your business model makes sense, if your unit economics actually is reliable, there's nothing for you to worry about. And we're going to be able to make it out of the other end.
Fantastic, thanks. Abdulaziz?
I think being smart or hardworking is very important, goes without saying. But being mindful about your TAM, because it can be very misleading, right? You see all these charts or the graphs, we go like, this is like a $10 billion market size, and this is how I'm going to convert it online, and I think sometimes we're misled by whatever data or reports we read, because you realistically need to double-click, zoom in, and really find out how much can you actually acquire of that market size. So number one, have a realistic TAM or a firm grip on it that you know you can bite on. I think number two is just do the right thing always. And if fortune favors the prepared, the right opportunity will come. Continue doing the right thing. Whatever is right to you, you stick to your values, make sure you have the right culture or environment, get the right investors, do the right thing. Don't bend.
I think one of the things that we always, talk to the entrepreneurs about is consumers, consumers, consumers. Who is your customer? If you understand your customer, whether it's a business to business or direct to consumers, understand that this is an ever-changing behavior. There will always be a lot about monitoring, understanding the data analytics, how the markets are changing, how is this going to evolve. To me, some of the best founders, honestly, I'm in love with flowers. I get flowers all the time, mostly before, more than buying, but I think there is uniqueness in understanding what customers go through in an emotional level, in a functional level, in a social level, and that brings magic, to the company. So always remember that no matter how you're attracted to big markets, if you don't understand your consumers, this could be a big bubble that you can fall into. So always train your team, should understand and should be around the same vision. CTO should be working with the CFO, should be working with the CEO, all together around understanding how consumers can impact, your business model and all of the other elements. So don't lose sight, I think, in your design. And maybe the last component is your valuation sometimes can be a vanity metric. Don't compare yourself to other companies because they raise the big round on that high valuation. It doesn't mean you have to do it at the same time. You stay true to yourself. You're going to have those investors coming to you once you have the right numbers and once you have the right economics. So that goes back a lot to values, by the way. So really, it's a good time, regardless that sometimes, people think it's a scary time. But I think there's a huge opportunity definitely for founders, and we can't wait to talk to you, I think, afterwards, for sure.
So maybe from my side, advice for the next 6 months, I think founders should be more disciplined in some sense when it comes to expenditure, optimizing operation. I think it's very important that they understand the market conditions that are happening and just be patient, be disciplined for a while. Hopefully things will turn out to the best next year or before the end of next year, inshallah.
Great. So, خلاص, audience? No audience questions? ولا في? Okay, we'll open it up there. Oh.
السلام عليكم. أسعد البو CEO founder of Lazy Weight. أعتقد أن opportunity في group of people they see opportunity وقاب. هذا بداية الستارت اب. Do you want me to talk in English? So opportunity happen when somebody find a gap in the market or an idea, start building on it. As entrepreneur, we find it's very difficult for us to align VCs with us, to see that gap and that opportunity. For example, Mr. Abdulaziz talked about the new verticals. We are seeing upcoming new verticals. But before we go to a new verticals, as entrepreneurs, we see potential in the existing verticals. And there's a huge gap. For example, we're working on food and beverage. Every single idea focusing, for example, on delivery of food, where we see a new horizontal. The dining experience. We are hitting big time on dining experience. And we see about 90% or even 99% of what happened after COVID, that people trying to avoid, for example, manual menu because of hygienes. We started seeing QR. Unfortunately, 99% of these QR opening a PDF. But as Lazy Wait, we automated that. We created online ordering, online payments. We are saving time, table turnover, saving on manpower. But unfortunately, we're, I would say, failing to make VCs align with us. We see huge potential. We are bootstrapping. Like Ahmed said, I'm seeing a real example just a couple of minutes ago, how the entrepreneur...
I think I got the question, just so that we're mindful of time. Maybe Abdulaziz, you can comment on that since you sat on both ends of the table.
Yeah, I think we're seeing more specialized VCs, depending on what stage of a company's life cycle you're actually in. Obviously for pre-seed, seed, later on, market will start, let's say, grouping itself into different stages. صراحة, some of them are quite existing, they do take bets on great founders with great visions. If you're not making it, maybe you're not reaching out to the right managers. Yani don't go to STV with an idea. Come to STV when you're growing a bit more. They're obviously a larger fund, mashallah, but please speak to Emil or others. There are lots of managers, صراحة, in the region that are focused on very early stage.
Okay. Hi. Nasreen Haram, CEO Cyberlaw.
Nasreen, نطلب منك توقفي, please. Thank you.
Tech company. Thank you, everyone, for a great session and great moderation. Okay. So the numbers you're talking about, the modest numbers even, seem completely forbidding for niche markets. Niche markets such as legal tech, or which need time to mature and in which the size of the market is limited and will probably never be appealing as B2Bs, not B2Cs, to any fund. The question is there a distortion that the funding industry is creating by, diverting social value and money to B2Cs, and postponing the development and evolution of tech in niche markets that will take a while before the market size and the addressable market becomes attractive to VCs?
Maybe I can take that really quick, because we have a lot of investments. The beauty of not having LP money to manage is you get to decide what to do without having to be accountable to anyone but yourself. So I think, honestly, the honest answer is, if I were managing someone's money, I need a big TAM. I mean, otherwise it just doesn't make sense. It won't make sense. So I think it's about, even for us at Tuhun, for example, there's a reason we didn't approach VCs, right? It's the mental health space. I personally believe it's a massive TAM, but it needs to be, to prove that in economics. So I think it's just about going after those investors who have that appetite and bootstrapping, focusing on profitability very early on. So for us, focusing on profitability means we're launching 3 clinics soon. I would have preferred to focus on digital, but 3 in-person clinics that will get very profitable very soon. Finding investors who are patient and not scaling the team and not getting distracted by the noise of some of the hyper-growth companies. And eventually it'll get there. And that's to my point earlier on the need for sub-billion-dollar exits, because many of these industries cannot command these types of exits. And there are pockets of investments, but the louder investors are the VCs. And I think focusing on niche markets is, entrepreneurs shouldn't be dissuaded from that, but they should just find the right pockets of money and focus on the metrics that matter, which is profitability. for these types of markets. I don't know if anyone else wants to add to that. Yes, لا هي قاعد تسأل عن specifically niche industries where the TAM might not be as large. But if you want to go ahead, يعني, you want to comment on that? Yeah, okay.
Hi, Qais Sheikh Hassan, Arabot co-founder. We can generalize the question, why is it harder to get investment to high-tech in the Middle East comparing to the States?
So we've done some investments in deep. Yeah, I think there's no specialized funds. The only deep tech investments we've done is in Palestine, Palestine الداخل specifically. They have a mature ecosystem where that occurs. But you know, if anyone comes to us with a deep tech business, our immediate response is, you know, this is not the right place for you to be. But I don't know if anyone else wants to comment on deep tech.
I mean, if you allow me, and you know, when I used to work in King Abdullah University of Science and Technology, it was all about deep tech. We talked taller, you know, basically solar companies, agri-tech, biotech. The challenge in deep tech companies is basically the long cycle of basically R&D. And then there's the proof of concept, the high cost of operations until you prove the concept. So there's a bit of like, it doesn't make any sense for VCs to come in that stage. And there's something they call a TRL, which is the technology readiness level in the technology. If you look at the variations, it doesn't make any sense to burn cash or VC cash at this stage. Neither for you, it's not good for you because they come at a very risky, you know, stage. But then at a certain period of time, you need those specialized funds that will add value to your technology and will allow you to expand. Now, is there many of those? There aren't a lot, but there are a couple of VCs that have done
I
some
think,
companies. Yep.
You might misunderstood my question.
Yeah.
I want to know the difference between like the VCs in the States who are willing like to invest 100 million in a NLP pre-seed company, for instance, and VCs in the Middle East. Like, what's the difference? Like, different type of people. Like, are our VCs all bankers, or they don't value high tech? What's the difference?
I think VCs will go after where they can generate exits in 7 to 10 years. So no matter what industry you're in, if you can prove that your business can exit, you know, in 7 to 10 years, they'll do it. I think the onus is on the entrepreneur to pitch their business as something that is liquid, because even if VCs aren't, you know, finance people, they've become finance people once they became VCs. I mean, you could be whatever you want. The moment you're managing another person's money, you're a financial, you know, you're a financial investor, and that is your only North Star metric. So, you know, if you pitch to them an exit scenario that is reasonable and that they can buy, they'll invest in anything. Like they will. I mean, people want to make returns, right?
I think look for GPs that have a passion to the area and they have a previous look and do your homework, because most of the time you'll see the partners that have worked or interacted in a similar sector, they could be excited to add value or at least mentor you until you're in a stage where you become more appealing or investable in them. But I agree with your point, it's not a common thing yet, but there are a lot of governments that are talking in the region about how to incentivize, you know, technology at the core and how to really bring more of these VCs that could be specialized with the right expertise as well. But happy to talk and know more, you know, later on.
Hey guys, great chat by the way. Great to see you up there. Adil Haddad from Omid. So my question really is more about the B2B healthcare space. We're seeing now, only recently, the last 12 months, more funding coming into the B2B healthcare space. And it's challenging, we know that. The regulatory space, the hurdles, the licenses. What would you recommend for at least growth stage for the next 12 to 24 months? What are some of the trends are you going to see in the healthcare B2B space, from consolidation, otherwise, you know, anything like that? Thank you.
I guess you would know more than I would. But yeah, I guess healthcare is still, especially in Saudi, there hasn't been, let's say, a dominating health tech company that we've seen as the creams or the flowers, etc. So we think it's a very, it's a very interesting market. We're looking for good founders, so that's one thing. But yeah, definitely healthcare is becoming a big, taking a lot of attention from us, and I am sure other VCs. Still, we haven't seen any, let's say, companies that are really dominating and eating up the market. But yeah, hopefully very soon. Let's see. Thank you.
أكيد أكيد.
Yeah, يعني I'm not an expert, so I'm preaching to the choir here. But healthcare overall, health tech in our part of the world hasn't really proven its economics. Okay, so there is a lot of bad taste.
Healthcare, health tech.
Health tech.
Health tech, okay.
The health tech hasn't really proven its unit economics. There are very early صراحة movers who've been doing this for the past 5 to 10 years, right? صح? No one has really nailed it across, يعني, it's multiple disciplines. It's not just across one. But there are many attempts in health tech for different activities that are yet to be proven economically feasible. I think, and even I wear an investor hat myself, but I think there's a lot of bad taste from the past that makes many investors shy away.
I was at HIMSS. You know HIMSS? I was at the HIMSS conference yesterday, actually, in Saudi. It's a healthcare conference. You know what the discussion was? You had all the big names, Al-Habib, you know, the Baterji, whoever you want. They're still at the point of, well, maybe not Al-Habib as much, still at the point of telemedicine. I mean, it's like, I think this industry is going to be disrupted from left field entire. Like someone's going to come in and just disrupt it. The patient experience is not front of mind. It's become about crisis management. It's not about patient care. It's about health and crisis management. We can have that discussion forever, but I'm happy to chat offline. And I think that's to the point of Abdul Aziz here. I think there's a lot that's starting to happen around experiential care rather than crisis management care.
And maybe for us also, there's a push from the government. So it's no longer a choice. There's a push actually to change a lot and to expedite. There's a lot about cost optimization and insurance. There's a lot about really digitalization. So we can't deny, you know, the impact of digitalization for both the consumers and, you know, in the healthcare sections. There's so much. If you remember the digital electronic, you know, records, that was a big deal. And a lot of actually hospitals didn't really catch up with it until today.
Yeah, Nafis. Saudi launched Nafis.
Mazboot.
Nafis is a wide success.
Mazboot. So that's what I'm saying. But it used to be like an impossible,
yes,
like
yes.
How would we do this? I've actually worked in Ministry of Health, you know, for a period of time, and there's so much we can actually talk about. I know we had chats, but I'm happy to really talk more because I think you're right. In the past 3 months, there has been a lot that has moved, and a lot of hospitals are going after those health tech companies offering acquisitions today because they know they will not build it inside. They know that these mindsets of these entrepreneurs will do a better job, you know, moving the boundaries and pushing the boundaries in technology. So definitely, I think there is a shift, you know, in the market.
There's the $1 billion longevity fund كمان هلا في المملكة.
Absolutely. So it's happening.
Longevity is primary care fund. It's
Exactly.
preventative care. It's not crisis management by definition.
There is the health model of care of Saudi
Yes.
Arabia that was created by the Vision Realization Office. And it started, there is funds for it, there is push in the private market, and it's actually real. It's based on the consumer experience in every element that you can talk about. So if you target and hit that on the right nerve, we have 4 companies in our portfolio. They're all in agreements now with the new clusters of Ministry of Health in paid contracts. So that I wouldn't have seen few years ago, but it is happening today. And the minute they go and pitch and it's the right product market fit and it solves a real problem, you see them willing to give you a pilot. And then after that, if it worked, you're good to go, at least to test, increase the numbers, you know, of consumers, patients, and increase the learning. But I think it's a good time, better than 4 years ago, for sure.
Hi, my name is Jafar Fakhouri, and I'm the president of a student-led club at King's Academy called King's Entrepreneurs. And my question is to Abdul Aziz. How did you manage the supply chain between local partners in a variety of countries?
You plan for it. Very simple. We have team members in Latin America, in East Africa, locally in different countries in Europe, who their role is to every day pick the best flowers from the best farmers and growers who meet the demand that is coming from the MENA region. And we have 5 shipments a week, actually, air freight, coming in to all the different countries, as well as the local supply. For example, in Jordan, we have a few farms we work with, and we make sure in whatever we can offtake in terms of produce locally that meets the quality of pricing is also managed. In Saudi, we do the same. في Tabuk primarily, that's where a lot of farming. It sounds easier said, صراحة, but it is easier said than done. There's a lot of logistics works behind it. The flowers are fresh cut, so you need to cut them in a certain way so that the stem lives longer, and then they need to be put in a refrigerator within a certain temperature. وبعدين بعد ما you cut them and you do the arrangement, it needs to be handled in a certain way. Sometimes for some countries, for some products, we give you some food for the actual flower itself so that it can breathe or live longer. يعني. And then the last mile delivery is also managed through our own fleet. So we have refrigerated cars. We make sure the flowers are put in a refrigerator. So before actually delivering them to the doorstep, the last thing we do is spray them so that they give that natural look right before delivery.
Thank you.